Please take your seats. Our program is about to begin.
Good afternoon, everybody. I'm Janice Mawson, Managing Director of the GCV Leadership Society. If you want to know anything there is to know about GCV, just come and talk to me, and I'm happy to fill you in and get you plugged in however I can do that. But I just wanted to introduce our next panel discussion that's going to be Lessons from the Field, 1 year of learnings from Xerox Ventures, and Kevin Yee is the partner of Mach 49, and he's going to be leading this discussion. So come on, guys.
Thanks.
All right, mic check, 1, 2.
Yeah.
Everyone can hear me? Yes?
Yeah.
All good? Excellent. Well, thanks everyone. I know it's getting into the afternoon. Everyone probably needs coffee, and we're all looking forward to the happy hour later. But I am immensely excited to be introducing the Xerox Ventures team, the guys who are in the field, on the ground, doing the work that Louis talked about earlier today in his keynote interview. So I'm very excited to introduce Chris Fisher, the managing director of Xerox Ventures, Tim Chang, investment director at Xerox Ventures, and Dean Mai, investment director at Xerox Ventures. I know it's. Why don't we give them a round of applause? So this is the part of the day where I really get excited because we can talk a little bit more about tactics and a little bit more about how do you actually get it done. And for me, I think this is a really unique opportunity because rarely do we get to see like a 1 year transformation, right? Because you guys were here at GCV last time, just getting started, maybe hadn't even gotten the approval yet, and now you're here, you have deals under your belt, you have a full team around you, and it's nice to just kind of take the snapshot in time and just figure out how you all did it. So, Chris, maybe I'll ask the first question to you. I love CVC origin stories. Why don't you talk us through the timeline? Who had the idea? Why did you do it? And how did you get to this point?
Yeah, I'd love to. It actually started pretty much shortly after I joined Xerox in 2019. I joined as the head of M&A and strategic transactions, and that role is pretty unique because it sits across pretty much all function areas and business units. So it gives you a nice cross-section view of the organization. And when you think about Xerox as a whole, it's a holding company. And so when you think of Fiddle, our $3.5 billion equipment financing business, our growing IT services business, our core business, being on site, being a technology provider for 220,000 SMBs, 90% of the Fortune 500, a lot of which Louis touched on earlier, all the way to our research and incubation centers in Park and XRCC. It wasn't a huge leap to think about the value a CVC can deliver, both to co-investors, to founders, but also bring back to Xerox. And so once we got to that realization, it was just really, we spent the next 18 months learning as much as we can, talking to whoever we could, and getting a lot of internal alignment. And when part of that learning was talking to this community, which is super open, very forthright. And then Louis was kind of our first giant champion, and you heard him, and he really helped kind of move mountains for us internally.
Yeah, absolutely. And I mean, Louis did do some ribbing at you guys earlier, so I figure we can also do some ribbing back at him in this session.
Normally, stuff flows downhill. So,
yeah. Okay. Fair enough. I definitely want to come back to the point about kind of what you learned from GCV last time. But before we do, I know for a lot of folks who are first getting started, they're trying to make the case for their own CVC. Can you help us break those 18 months down? How many months did you spend on kind of the feedback? How many months did you spend on actually prepping and designing it? And then how many months did you actually have you been operating as Xerox Ventures?
Yeah, that's a good question, and I'll ask Tim Chang and Dean Ma to join in here. But I'd say the first 6 months was this idea of, and Louis talked a little bit about it, of finding the right time. So there was a lot of work you're kind of doing on your own, right? To build the strategy and the case. So I'd say 6 months of it was just trying to figure out what this was and how it applies to us and what our take on it's going to be. And then, another really 6 months to build the strategy, figure out how you want to approach it, build the charter. right? But really when you start to actually then get approval and start socializing it at a detailed level and how you're going to operationalize it, like you could add another 3 to 6 months in that because everyone's got an opinion.
Yeah.
And then really, you think about it, it got launched in February 2021. Like that's when we announced to the street this $250 million fund. We then had to go out and build the team. And that's when we brought Tim in August 2021 and Dean in November 2021. And that's when we really started to operationalize this. And I think you guys had a front row seat for this, right? You saw the funnel build. You saw it just completely accelerate. Yeah. And part of that credit, a lot of that credit goes to the team here, yeah. Right? And the ecosystem they've built and the funnel they've built and the way. So when you think about how we've operationalized and what we've accomplished, you can almost think about the 12 months that we've, in really an 8-month increment, because that's really when we've been running at it.
Yeah, and I mean, started in February. Tim, you came on board in August. I mean, that is 6 months where you are officially operating already, but you didn't have any directors. Yeah.
That's right. But we had a plan and we knew what we wanted to do, and that's the nice part about Xerox is we could leverage the muscle across the org.
Yeah.
Right. And so a lot of it though in those first 6 months is starting to build that pattern recognition. Right. It's building that funnel. So like it's not a bad thing that we did one investment in that period and it turned out to be a great one, but that's fine, right? Like we need to build that funnel, we need to build that muscle, we need to build that recognition.
Yeah, absolutely. Going to Tim and Dean, neither of you are new to the corporate innovation or venture space. Both of you have been part of open R&D, open innovation, or other CVCs before. What drew you guys to kind of the Xerox Ventures value proposition?
Yeah, I can start. So yeah, I mean, kind of piggybacking on that last statement, you can kind of think of a new CVC like a startup, right? Where we got an idea starting off, and then as you go, you're iterating and you're learning as you go, and you're refining your thesis and you're pivoting a little bit, not too much, but for me, when I started, when I joined, when I was considering the opportunity, it was very much like considering an early stage startup investment, right? Like you're considering three main things. You're considering the team, you're considering the market, and you're considering the technology or the platform. And so for me, it was the team. Like, do we have the right people at the helm? This is my third CVC, and that to me is very important. So spoke with Chris several times, Louis, and then the other members of the CVC team at the time who had sort of ported over from the M&A group. And so, these are, especially after talking to Louis, after talking to Chris, I just came away from that conversation like, these guys get it. These guys have clearly done their homework. These guys clearly have understood what level of commitment needs to be. Sometimes new CVCs will sort of dabble a little bit up front. These guys were all in. And so that level of conviction just won me over. And then you look at the market, these guys understand, and sort of the platform that they saw Xerox Ventures to build upon. The areas of focus that they wanted to focus on. So the market was there. They were focusing on investing in just global megatrends of emergence. And then the technology, or the platform. Xerox Ventures is building off of an incredible brand. And Chris mentioned XRCC earlier, Louis as well, Park, our businesses. Being able to pull value from those parts of Xerox and then deploy that to the innovation ecosystem with the intention to benefit our companies. That was the technology, that was the platform. So those three things, running diligence on Xerox Ventures, coming out of it, yeah, I'm going to back this, I'm going to join. So that's what won me over.
What you need?
Yeah, I think to echo Tim's comments, I think I quickly realized and recognized all the tremendous work that Chris and Louis have done. So for me personally, it was volume, velocity, and people. So I was coming from Dyson, extremely secretive organization with extreme narrow, almost surgical focus on how we drive these external engagements. So I think from the projection of how it was structured correctly, what Chris and Louis have done, I think I've seen that tremendous velocity of how we can expand and be really great players within that ecosystem. So that was extremely appealing for myself. Yeah.
Well, and since we're trying to give tactical tips to the audience, How important was it to the two of you that Xerox Ventures was a financially focused fund? Louis did a great job of kind of explaining the rationale behind that earlier this morning. Did that enter into the calculus for the two of you?
Yeah, for me personally, coming from an R&D heavy organization, a lot of stars have to align for things to happen externally. So being financial driven, number one KPIs, returns allows you to move extremely fast. And a lot of corporate strategics and corporate companies in general, right, they think in months, react in years sometimes. That's why during recession, you're actually more stable because you're already committed. But within startup communities and venture communities, startups think in weeks, react in months, sometimes think in hours, react in weeks, so they pivot extremely quickly. So if you're not financial driven, it's extremely hard to collapse the decision-making process from bringing corporate closer to reaction times of startups. So for me, it was the main driver to drive this successful engagements.
Great.
Yeah, I think for me it was also very important. I've seen funds very, very strategic and well-intentioned, right? I think not to bash that too badly, but if you're going to take 3 months or 4 months to diligence a deal, to line up conviction, you're just going to be relegated to perpetual Series B extension rounds. You're not going to be able to move fast and with conviction and move fast on the best opportunities, the most oversubscribed and competitive rounds. And so for me, that was very important, to this commitment to move fast, this commitment to see the upside potential first, but then intentionally, and this is one thing that I think we've done a lot from the very beginning, the strategic value add to the startups, sort of greasing those skids up front so that we can deliver that and have those conversations really quickly without slowing down our process. And so our process, I think intentionally has been designed that way to move fast. So it's been a big deal.
I do want to come back to that element of how do you grease the skids, right? Because I think we've all heard move fast across this conference, across all of our peers. How you move fast is always the bigger question, right? How do you actually do that? But I think going back actually to the original conceit of the panel here, so we're a little over a year in, Chris. I mean, can you share with us, what does the scorecard look like for Xerox Ventures? What have you guys accomplished in the first year?
Yeah, I'd love to. And like I said, we started in February 2021, but it wasn't until Dean and Tim came on that we really got this muscle fully running. And so some of it's some vanity stats, right? But in like an 8-month period, if you think about it, tracked and logged over 700 relevant companies, met with over 200 founders. Over 70 commercial introductions to our business units, 15 POCs or customer contracts. We've only invested in 1 or 2 of those companies, and I think we can touch on that a little bit later. 6 investments in 5 companies and 1 up round. So we feel really good about how we hit the ground running. And I just want to touch on this financial point because it is, it was very intentional how we set it up. And we set it up that way for the reasons Louis outlined this morning. But we also set it up that way because the overall thesis is strategies can change. But if you anchor to financial returns and the thesis is, hey, we're going to invest in transformative founders and companies that are going to win the markets of the future. And so our base case there is financial returns. By being involved and tied at the hip with those relevant companies, in theory, the most relevant companies of the future, we will get strategic returns back. And when I mentioned, 70 commercial introductions, what we always posited was that by doing the work, by pulling forward those financial investments, so seeing 1,000 companies and investing in 10, all the stuff we see in between that we're going to pass to our business units, or even the ones that we do invest in that we pass, that's strategic value right there. Yeah. So we don't have to invest in these to create this flywheel. And that it's proven out to be true. And now people are coming to us in the organization to look out for things that solve their pain point. And we can, and we might not invest in them, or we might.
I mean, 70 commercial introductions, that is incredible. I'd like to dig a little bit more in there. And I'm curious to what degree that's part of the greasing the skids process. So to any of you three, I mean, what are some of the tactical tips or things that you've kind of implemented into your process to be able to kind of hit such high numbers of business unit engagement? Because I know groups where it can take weeks to get a meeting with a business unit head, and then it'll take months to even figure out what a POC could look like, let alone be negotiated. But you guys seem to have gotten into a pretty consistent habit of being able to quickly get the feedback, get them in front of the right person without wasting anyone's time.
I want these guys to answer it, but when they came on, they shared the vision. And part of it has to do with their experience and how they can talk to the business units, and they can relate to them, and they can understand what they're going to do. And they both just jumped right in.
Yeah.
And so they're just almost embedded with the verticals, if you will.
And I specifically would love to hear it in the context of being new to Xerox, because neither of the two of you have worked for Xerox before. It's not like you knew any of these people, but now you're giving 70 commercial introductions to other BU heads. How do you do that?
Late nights? A lot of emails?
Lots of late nights, a lot of emails at 11, 12. I think in many areas of Xerox is a phenomenal company because the innovation DNA just pervades through the company. Like Xerox has always been in the business of innovation. And so you have a lot of people at Xerox who are just deeply interested in being a part of something new, something innovative, something next generation, something frontier. We talk about Park and XRCC, that's no-brainer, but even amongst our businesses, I think you can find stakeholders and champions who just want to be a part of it, right? And they're just rooting for us. They're super excited to hear about what we're doing, and the companies that we're talking about, or the themes that we're exploring, the theses that we're developing. So allowing them to be a part of that conversation a little bit, helping them to feel involved and have ownership, I think has been very powerful because you're tapping into an instinct that already exists, I feel, within many areas of Xerox. And so, yeah, recurring meetings. Just kind of regular touch points, but also impromptu ad hoc just conversations with our just high touch points that have been welcomed and finding those right people. I think that's just, it sounds obvious, but we've really benefited from just investing in those relationships, and then say we're looking at a high velocity deal. Well, those relationships are just sort of on the call. So I think that's been something that, I think the other thing that we did early on, with every deal announcement we make, we do, this is a tactical thing, I think, we do an internal senior leadership team email, or this announcement internally that does a little bit of a rationale of why we made the investment. Here's a little snippet of our investment memo, so you get a glimpse of the rationale and what we see and why we're excited about the investment. But then also we do a little bit of a shout out to those internally who helped us out with diligence or helped us out with connecting to a potential partnership or otherwise, and that's been tremendous. I think internally they value that. They value that visibility. They value sort of the ability to kind of be recognized for their involvement and contribution to our effort. So that's been something that I think has been part of that. Investing into this internal flywheel that has helped us out quite a bit.
Yeah, and I think for us, managing some of these success metrics internally actually starts externally first. And I think that comes with almost this radical transparency when we talk to startups and entrepreneurs and manage those expectations accordingly. How we define success on the venture side and how we see success evolving within our business core businesses. So I think from the tactical perspective, for me personally, it's like a 90% rule that I have to know or almost predict the pitch of a startup to 90% and complete their sentences. So it's really deep understanding of what the value the startup is trying to go after and what value add we can generate as Xerox and as Xerox Ventures. So I think that also helps, from the expectation management when we go to our core businesses and we sell it internally, we also have a full visibility and full understanding of what pain points we might address through the startup. And because we're so open and clear, I think it just collapses some of these barriers of communication when we do link them together. So things come together quicker.
Fantastic. Switching gears a little bit, and this is directed at you, Chris. So I know the first year for any CVC with a new investment committee, there's a lot of scrutiny over your first few deals. So, just curious, how did you get the first few deals approved? Like, full stop.
Blood, sweat, and tears.
No, I'm very thankful. I've got an extremely supportive IC, and as Louis indicated this morning, it's myself and the C-suite.
Yeah.
So very supportive. They're supportive of the fund at the highest levels of the company. On the flip side, they're all seasoned operators, investors, technologists, and we were really intentional of how we set this mechanism up, because we tell our potential portfolio companies and our co-investors that we can move extremely fast. That was really important to us. So the IC is a majority vote, even if the highest folks on the IC are a no, and we've tested it. And they also have agreed to meet within 48 hours of an investment notice request, which we've tested and it's held. So all these things were really intentional design, and sometimes for some of them, when we bring something to the IC, it might be the first time they're seeing it, which means it's incredibly incumbent upon us to have every box checked, because we have to be able to answer every single question, and which means we have to do probably more diligence than a normal follow-on investor would do in a shorter time period. And we've managed to do that. So they've been tough rooms, very demanding rooms, but very fair rooms. And really, if we're not ready for the room, then maybe we're not ready to do the investment. And so far, so good. We're undefeated right now. Knock on wood.
Well, Louis hearing that in the audience, and he's like, well, I can change that.
He normally has a little bit more insight. He's not surprised generally in the room. So
Fair enough. Well, actually, for the audience, maybe digging a little bit more. So what does that meeting look like? Are you presenting and then defending? Is it almost like a thesis defense? Is it a 10-page presentation, a 30-page memo? What does it look like to be over-prepared for these types of committee rooms?
this is what's been really interesting from the maturation of the muscle, right? Like, we started with these massive decks, right? Just massive decks. They covered everything. And, we get through half of them, maybe a quarter, maybe that's Louis laughing, it's generous, right, before the questions start coming in. But we eventually touch on everything. And the thing is, the IC is very diverse. Yeah. So the questions come from a lot of different angles, from a lot of different aspects, right? And so, but what we've slowly done is it seems to change by stage too. So like what our seed deals look like now are much different than what our B or C round deals look like. And they're starting to, even like the returns analysis has started to morph a little bit. And so we're starting to get a feel of like what people like and what people want to see. And they're also starting to get a lot more confidence in us. And so that makes it all a lot easier. So it started massive, we're a deck company, but now we're starting to get to more of a traditional investment memo with maybe like a deck backup. We're gonna try a little bit different one. We've got another one here in about a week. We're gonna try a little bit differently and see how it goes.
I love it, constantly experimenting on how to make the process more efficient. So for Tim and Dean, I mean, a lot of people know Xerox because of the copiers, and I think from listening to Louis and yourselves today, there's so many facets of Xerox that I think the general public probably don't know about. The equipment financing aspects, all the innovations happening at XRCC and Park. Curious for the two of you, kind of being the soldiers on the ground, finding the deals, championing for them. How do you guys manage such diverse areas? Because when I think about your themes, you look at everything from deep tech, climate tech, to cybersecurity, to SMB software. How do you divvy that up? How do you manage that effectively as a ventures team?
You want to take? So I lead our software practice. So anything that touches software loosely gets assigned to myself, and then Tim leads all the deep tech, lean tech, kind of heavy hardware focus. And I'll let him answer to some of his core focuses. I think Xerox has been historically in this nexus of hardware, software, and services, right? So for me, more often than not, I ask myself, what's not going to change in the next decade, in the next 15 years, right? And the businesses in the world has been so unpredictable in the past few years that our ability to forecast where Xerox might be in 15 years is quite out there. So I think from the software perspective, again, asking that question is what's not going to change in the next decade or so, it's really this almost fundamental psychological shifts, right? And we see newer generations have higher tolerance towards technological tools, less tolerance towards inefficiencies or doing manual work. There's an implosion in data, in AGI, and privacy concerns, so that's something of strategic interest for us. But more importantly, Xerox is a holding company, so we're playing, again, in this nexus of creating next generation of businesses and becoming this one-stop shop for everything that might require that business in the future. So how we build an infrastructure, how we lay out the foundation that this new breed of businesses will grow out of. So that's, from the software perspective, is anything around these loose links from the software perspective around data, AI, cloud, and automation, business transformation as a whole, is something that is of interest for me and our practice from the software perspective.
Yeah, I think on the deep tech and clean tech side, the answer is a little different, but not all that different. Because, I think when you ask, like, what industries does Xerox play in, it's all of them. Like, which industries do we sell into? All of them. And so Xerox is actually a very broad company. We're everywhere, and that plays to our strength, right? Louis this morning talked about 220,000 SMBs within our customer footprint, 90% of the Fortune 500. That's a strength. That's a card that we get to play and bring to bear. But then how do we start from there and then narrow down and be very disciplined and be very focused? And that's a little more tough of a thing to ask, because I think it really kind of requires us. It's really on Dean and I to have this very like a both and approach, like both having a very clear understanding of where the next trends are going. Like, what's our thesis in this space? What do we think is going to win? And then on top of that, where do we have an edge internally? Like, what's our superpower? Like, what bounds us to specific opportunities in a space that we're interested in, where we get to play and we actually get to add a ton of value to. And so a lot of it comes down to sort of self-policing or self kind of constraining and bounding our specific focus. But that requires us to just have a deep understanding of our businesses, deep understanding of our capabilities and our strengths. I'll give you an example, right? Like in clean tech, right? So if we're talking about replacement materials, we actually have a very strong materials research and development capability within Xerox that not a lot of people know about, but it's world class. And when we talk about replacement materials, there's sort of like this bio approach towards it or an electrochemical approach towards it. They're all really cool. I would love to do a synthetic biology deal someday, but we happen to have incredible strength in electrochemistry. So I think that's probably, for us, that'll probably be an area where we can add the most value. So that helps us constrain and bound the opportunity set.
Fantastic. Well, I can't believe we're actually almost already at the end of 30 minutes. Maybe in the last 2 minutes we've got here, I'd love to ask each of you, could be something that, you learned from GCV last year, as you were getting started, and it just happened to be the most helpful tip or facet of, your first year of CVC that you really oriented around. Or it could just be something unique that you think Xerox Ventures does that has been incredibly helpful, that you think folks could benefit from adopting themselves. But if each one of you can pick just kind of one tip to give everyone in the audience on, here's how you get off to a really strong start in your first 12 to 18 months, what would it be? And I'll start. No, I'm starting with you.
Starting with me. So for GCVI for me was foundational because my first GCVI was New York in 2019 when we first started on this journey, and then Tim and I came back last year. And so I'm going to cheat a little bit on your question. And I think for us, when I contrasted 2019 to when we were out last year, it was a lot of the questions about how the CVC operated were much sharper, right? It was how fast do you do deals? Who's on your investment committee? Are you financial? Are you strategic? And there are a million others, right? Are you independent? All of these things, right? And what it allowed us to do was to come back, and I still remember us sitting in the Monterey airport, and like I'm writing all this down, like stream of consciousness, and we're going back and forth. And I like flew back, and I think right before I got my Wi-Fi cut off, I shot the note to Louis, and I was like, look, like this is how we said we were going to set it up. This is what we're hearing from people is important. Like the way we're going is the right way. Like this confirmation, and that was the first step of internal people being like, all right, maybe these people aren't idiots. Like maybe they know what they're doing, right? And Louis laughing because anything more generous, he would be like, no. But so that was my big takeaway, like this sanity check of like we're headed in the right direction and building internal champions because they had confidence in us.
Yeah, fantastic. Tim?
I mean, that's exactly what I would have said. I think if I could say one more thing would probably be just the relationships that GCV is such a special place. It's like the rendezvous of CVCs and the relationships and the networks that we build here just pay off dividends. And there's like this network effect that gets cultivated, sort of seeded here and then cultivated over years. And so it's always great to be back. And then, so much of our deals, so much of the opportunities that we see, I think in some way traces back to some of the relationships that we build here. So,
and Tim, I'll have to give you a lot of credit on that one because you started, and even though the Xerox venture scope was much broader and went into areas that you weren't in before, I mean, you were finding deals within a week and bringing them to the table. And I think a huge testament to, I guess, the relationships you built way in advance before you even realized that you would be able to use them.
Yeah, I think for me it's kind of how we transcend through like beyond GCVI, right? The real successful hubs in the world, if you really look, Silicon Valley, Israel, Singapore. I think what drives them these loose connections, right? Of just free flow exchange of ideas that both entrepreneurs, but especially venture capitalists are driving. So I think for us, it's extremely important to be just good players within the ecosystem and not just, be really aggressive with deals, which we are, but also how we contribute and how we expand the ecosystem overall, because our goal is, to contribute to innovation, and that's what Xerox has been doing for centuries. Yeah.
Well, fantastic. We're getting the little red blinking light that tells us we should probably stop. But thank you to the three of you. I think a round of applause for them. And I certainly welcome everyone to come find any of these fine gentlemen at happy hour later.
Thanks, Kevin.
Thanks, Kevin.
Thank you.